$17 to $28 billion of Nvidia chips. Sitting in a warehouse, zero shipped. Wall Street is loading up anyway. Bank of America just raised its price target to $320. TD Cowen to $275. Nvidia reports Wednesday, and the most important number on the call isn't the Q1 beat, it's the dollar value of stranded China inventory. This is your NVDA T-2 preview for Monday, May 18th. Hit subscribe. The next 48 hours are about to move markets. Friday closed ugly. NASDAQ down 1.5%, S&P down 1.2%, Nvidia itself off 4%, AMD off nearly 6%. But that sell-off wasn't a credit event. It was a bond route duration repricing, global yields spiking, Italy, France, and Germany, 10 years all up almost 4% in a single session. Japan's 10-year at a fresh post-yield curve control high. Credit spreads actually tighten. Financial conditions are easier than they were a week ago. So heading into NVDA Wednesday, this is a setup, not a crash. The names that matter are on sale. Let's get into the four numbers that actually decide where the stock goes Wednesday night. Here's the framing nobody on financial TV is getting right. There are four numbers that define Nvidia's China optionality going into this print, and they tell a story. Number one, 750,000. That's the maximum H200 chip volume the United States Commerce Department has authorized for export to China. 10 approved Chinese firms, Alibaba, ByteDance, Tencent, JD, and 6 others, each licensed up to 75,000 chips. Total cap, 750,000 units. Trump signed off on the structure in December 2025. Commerce granted the licenses in late February 2026. A 25% U.S. revenue share rides on every chip sold under this framework. That's the haircut on any China unlock you hear about. Number two, 700,000. That's Nvidia's actual H200 China spec inventory. They built it. It's sitting in a warehouse, ready to ship. Roughly $30,000 per chip. Call it $25,000 to $40,000 depending on configuration. And you arrive at $17 to $28 billion of stranded inventory. That's the number to watch on Wednesday's call. Number three, 2 million. That's the Chinese order book. Chinese tech firms have placed orders for over 2 million H200 chips, nearly 3 times what NVDA actually has in inventory. The demand is unambiguous. The supply is built. The licenses are granted. Number four, 0. That's how many chips have actually shipped. Beijing has been quietly pushing Chinese firms toward domestic alternatives. Huawei's Ascend line, Cambricon, Byron. Trump himself said on Air Force One that Xi chose not to let Chinese companies buy them. Jensen Huang publicly admitted on the last earnings call that Nvidia's China share is currently 0. So here is the asymmetric event Wednesday. Does Jensen quantify the dollar value of the stranded inventory? If he does and gives any kind of timeline on a Beijing thaw, even hand-wavy, the stock rips on optionality. If he punts, China gets priced to 0 and the multiple compresses. Watch for the words stranded, non-cancelable, or any specific reserve charge. That's the tell. The street is getting more bullish, not less, into Wednesday. Bank of America's Vivek Arya lifted his price target from $300 to $320, raising fiscal year 28 and fiscal year 29 sales and EPS estimates by 7% each. TD Cowen marked the stock up from $235 to $275. Goldman Sachs is talking about a $1 trillion data center, TAM, by 2030. Jefferies took CRWV to 160. Wall Street consensus now sits at $78.8 billion in Q1 revenue, $1.77 EPS. That's roughly $400 million above Nvidia's own $78 billion guidance midpoint. Options are pricing a 5 to 10% move on the print, with 30-day implied volatility in the mid-40s heading into Tuesday's close. Here's what most retail coverage gets wrong. The Q1 beat doesn't matter. What matters is the Q2 guide. Q2 consensus already prices in $86.6 billion of revenue. That would be 85% year-over-year growth. A guide below $84 billion reads as deceleration and historically triggers a same-day drop even on a clean Q1 beat. A guide above 88 billion is a melt-up. Three things drive the Q2 number. Blackwell GB300 Ultra yields. Nvidia needs to hold gross margins in the mid-70s. Data center mix. Blackwell was about 70% of data center compute last quarter and needs to keep climbing. And the China question, if Jensen flags even a partial China revenue line in Q2, it backstops the entire guide. Three names that catch the same wave but aren't NVDA binary. Vertiv, VRT, hit a 52-week high Friday despite the broader sell-off. Q1 revenue up 30%, operating margin expanded 430 basis points. Pure physical infrastructure pull-through, every hyperscaler watt deployed flows through Vertiv's power and cooling. If NVDA guides Q2 above consensus, VRT moves with it. If NVDA disappoints, VRT is more defensive because the data center build-out is already in flight regardless of Q3 chip mix. CRWV, CRWV, Jefferies raised the price target to $160 from $120, a 33% bump. Catalyst was their May 14th launch of CRWV sandboxes, their positioning as a developer-first AI cloud, not just a GPU rental shop. Q1 revenue up 112% year-over-year. Backlog $99.4 billion, up 50% quarter-over-quarter. 2026 CapEx floor raised to $35 billion. The June Investor Day is the absorption gate to watch. AMD, the pair trade name. AMD is the relative weakness side of any NVDA positive print, down 6% Friday on no AMD-specific news. That's the market pricing the NVDA vs AMD spread. If you're long NVDA into the print and want to hedge, the AMD put spread is the classic structure. If NVDA disappoints, AMD typically catches a bid as money rotates. Three ways NVDA goes lower. Wednesday, Q2 guide under 84 billion, China commentary is a punt, no quantification, no path, or gross margin guide below 73% that signals Blackwell yield problems. If 2 of 3 hit, options pricing says down 8 to 10. The hedge structure, NVDA short-dated put spreads, or long AMD against short NVDA into the print. The bull case in one sentence, Q2 guide 88 billion plus, Jensen quantifies the stranded inventory at 20 billion plus, and gives a Beijing thaw timeline. That's a vertical move on the open Thursday. Wednesday at 4 p.m. Eastern, I'm running a live reaction stream the moment NVDA prints. Hit subscribe and ring the bell so you don't miss it. Drop your prediction in the comments. Beat the Q2 number or miss. Tomorrow morning, Tuesday, T-1, I'm posting the tactical setup, option structures, key technical levels on NVDA, and a preview of Vertiv's read-through. The day after that is the print. If you find this useful, the daily newsletter version with the full numbers is linked in the description. Free for now. See you Tuesday morning.